Welcome back to Velocity Banking 101, Building Wealth in the Black Community. Are you tired of feeling suffocated by your debts, living paycheck to paycheck with no end in sight? What if I told you there was a way to break free from the cycle and pay off your loans in record time without drastically increasing your income or cutting your expenses to the bone? We will use Velocity Banking, and in this video, we're going to dive deep into how it works, walking through a real-life example month by month. Imagine a couple, let's call them John and Sarah, with 3 primary debts dragging them down. An upgrade loan, a high-interest line of credit for $4,000 at a whopping 29% APR, with monthly payments of $300. A car loan with a balance of $8,500, monthly payments of $750, and an interest rate of 6%. Credit card debt of $2,000 with a minimum monthly payment of $120 and an APR of 22%. John and Sarah bring home $5,000 per month, but after accounting for rent, utilities, groceries, and other essentials, they only have $100 left each month as cash flow. They're stuck in a paycheck-to-paycheck cycle, barely making a dent in their balances despite their best efforts. Here's where the Velocity Banking method comes in. The core idea is to use a credit card with a high limit as your primary financial tool, focusing all your financial power on one debt at a time. For John and Sarah, their credit card has a $16,000 limit at 22% APR. So we will use this card as the debt tool. Remember, it only has a balance of $2,000, which leaves us $14,000 to work with. The first step is to use this card to pay off their other debts. They will get a balance transfer check from their credit card company to pay off their upgrade loan and car loan in full. Let's assume a 3% balance transfer fee, adding $375 to their credit card balance. After these moves, their credit card balance stands at $14,875. It's higher than before, but now all their debts are consolidated in one place at a lower average interest rate. After all this, they magically created a robust cash flow of $1,270 monthly. We went from $100 of cash flow to $1,270 by moving our money to the right places. Now let's walk through their scenario using Velocity Banking. This is what month 1 would look like. The starting balance will be $14,875. They will put their entire income of $5,000 into the line of credit, bringing their balance down to $9,875. They will pay their expenses of $3,738. Interest for the month, assuming average daily balance, will be $248. Leaving an ending balance of $13,861. This is what month 2 will look like. The starting balance will be $13,861. They will put their entire income of $5,000 into the line of credit, bringing their balance down to $8,861. They will pay their expenses of $3,738. Interest for the month, assuming average daily balance, will be $223. Leaving an ending balance of $12,822. This is what month 3 will look like. The starting balance will be $12,822. They will put their entire income of $5,000 into the line of credit, bringing their balance down to $7,822. They will pay their expenses of $3,738. Interest for the month, assuming average daily balance, will be $197. Leaving an ending balance of $11,757. This is what month 4 will look like. The starting balance will be $11,757. They will put their entire income of $5,000 into the line of credit, bringing their balance down to $6,757. They will pay their expenses of $3,738. Interest for the month, assuming average daily balance, will be $171. Leaving an ending balance of $10,666. This is what month 5 will look like. The starting balance will be $10,666. They will put their entire income of $5,000 into the line of credit, bringing their balance down to $5,666. They will pay their expenses of $3,738. Interest for the month, assuming average daily balance, will be $144. Leaving an ending balance of $9,548. This is what month 6 will look like. The starting balance will be $9,548. They will put their entire income of $5,000 into the line of credit, bringing their balance down to $4,548. They will pay their expenses of $3,738. Interest for the month, assuming average daily balance, will be $116, leaving an ending balance of $8,402. This is what month 7 will look like. The starting balance will be $8,402. They will put their entire income of $5,000 into the line of credit, bringing their balance down to $3,402. They will pay their expenses of $3,738. Interest for the month, assuming average daily balance, will be $87, leaving an ending balance of $7,227. This is what month 8 will look like. The starting balance will be $7,277. They will put their entire income of $5,000 into the line of credit, bringing their balance down to $2,277. They will pay their expenses of $3,738. Interest for the month, assuming average daily balance, will be $57, leaving an ending balance of $6,022. This is what month 9 will look like. The starting balance will be $6,022. They will put their entire income of $5,000 into the line of credit, bringing their balance down to $1,022. They will pay their expenses of $3,738. Interest for the month, assuming average daily balance, will be $26, leaving an ending balance of $4,786. You can now see that the income is larger than the balance, which means it took us 10 months to pay off $15,000 of debt with nothing but $100 of cash flow to start with. By consolidating debts onto a single credit card and using it as their primary debt tool, John and Sarah could focus their economic power and pay down their balances much faster. The key is to put your entire paycheck onto the card as soon as you get paid, minimizing the average daily balance and, thus, the interest charges. This method takes discipline. You must trust the process and not overspend because you have available credit. Velocity banking isn't magic. It's about being strategic and efficient with your money. It won't solve income or spending problems on its own. So there you have it, a real-life walkthrough of velocity banking to get out of debt in 10 months. John and Sarah were able to pay off nearly $15,000 of debt without any windfalls or extreme budget cuts, just by changing how they use their credit cards and focusing their financial power. Now, this method isn't for everyone. It requires discipline, focus, and a decent credit score to get started. But if you're stuck in the cycle of minimum payments and feel like you're running on a debt treadmill, give velocity banking a try. It just might be the key to your financial freedom. If you found this walkthrough helpful, smash that like button and subscribe for more creative money tips and real-life inspiration. If you want to see how to use a personal line of credit, click on the video to the left. Or if you want to see how you can use a home equity line of credit, click on the video to the right. Remember, family, you gotta think rich to grow rich or you won't achieve it.